Good morning everyone, welcome to the official tip channel of Officer Survey 24/7. As you all know, we have a 50 days 50 classes series in which we are discussing every day the one single topic of your Indian economy, Indian financial system at 7:30 AM only on Officer Survey 24/7. The same we are doing in the same channel at 7 AM for PPB, Principles and Practices of Banking. So do remember, Monday to Friday you have to join the session at 7 AM and 7:30 AM for PPB and IFS respectively. On Saturday you will find the weekly revision session, and on Sunday you will find the special session. So do not forget to join these session only on Offices at 24/7. And if you want to join the session, do subscribe the channel and press the bell icon so that all the upcoming sessions notification will be given to you. Okay, so let's start the session. In this particular session we are going to discuss IFS particular module B chapter. So as you know, 45 units are there in module in overall your Indian economy, Indian financial system. Out of that, if I talk about 11 units were there in the module A, till 19 we have module B. So today we are going to cover the 19th unit. It means today we will be ending the unit 19. It means module B of your IFS. Okay, so before starting to the chapter, first of all, I am your mentor Amanjot Kaur for Indian economy, Indian financial system as well as for PPB. And now I want to let you know first that what actually the union budget is. As you can see, the 19th unit is about your union budget. So what actually the union budget is, let's discuss that first and then we will discuss the questions. Okay, so the union budget, if I talk about, is also you can call that fiscal policy. So the fiscal policy every year presented with the union budget of government of India. Okay, so first of all, union budget earlier what used to happen, first of all, it is prepared by Ministry of Finance, it is presented by Finance Minister, it is presented on 1st Feb, that is the first working day of 1st Feb or the 1st Feb, then at 11 AM it will be presented. This is the basics of your budget. Now how this has been started, earlier we used to have what? In India there was the general budget that used introduced by Britishers. So Britishers introduced the general budget in India in 1869. So the first budget of India was introduced in the year 1869. Then this general budget was divided into two parts. The first part was rail budget that used to presented by the Ministry of Railway Minister, and the second budget was union budget that used to presented by the Finance Minister, or it used to prepared by the Ministry of Finance. Then what happened? Then again in 2017-18 it is converted into general budget. Okay, so from 2017-18 we again have merged the budget and we are presenting general budget only. And since then this general budget prepared by Ministry of Finance, presented by Finance Minister, presented on 1st February and presented at 11 AM. One day before of this budget day we present the economic survey. Economic survey is simply the survey of the economy which let you know that what is the position of your economy, that is known as economic survey, right? So here we are talking about economic survey. It is presented one day before union budget. Okay, now I have discussed what is union budget, when it will be prepared, certain points I have given to you. Now one more important thing, in our constitution they haven't used the word budget. In the article 112 they have used the term that is annual financial statement. They have introduced the term annual financial statement. So the annual financial statement is defined under our constitution in the article 112. It is the budget have not been defined in any particular term, that is the budget. Budget was also talked as the annual financial statement. Okay, and what this annual financial statement actually is, this annual financial statement is the statement of income and expenditure of government of India. It is the income and expenditure of government of India. And also remember, whenever government of India presents the budget, it always gives you the estimate budget. It always gives you what? Estimate budget. Because whenever government is presenting budget, that budget will be presented for the upcoming financial year, not for the current financial year. You are estimating for the upcoming financial year. That is your budget, है ना? That's the estimated budget. Estimated budget. And in the end of the financial year, you do what? You revise this budget just to check whatever planning you have done, it was success or not. So in the end of the financial year, we do what? We revise the budget. Okay. Now apart from that, if we talk about budget, the sources of income for Government of India are of almost 4 types. First, government earn money from tax. Government earn money from non-tax services. Tax means direct tax, indirect tax, both will be covered. In non-tax, government will cover your taxes, not taxes, fine, penalty, challan, etc. will be covered in the non-tax. Then we have a debt receipts. It means the government have given a loan to someone, to some country, and government is charging interest on that. Then we have non-debt receipts. Now non-debt receipts simply means what? It simply means you are taking back, you are doing investment. On investment, you are taking back the profits. That's the non-debt receipts. These are the sources of income for Government of India, and the expenditure for Government of India are of 2 parts, or they have divided into 2 parts. That is scheme expenditure and non-scheme expenditure. So there are certain expenditures in the country which are already planned. We have to establish schools or hospitals, dams or something else, let's say. So this is already planned. We have to give LPG connection to 1 crore BPL family in the country. This is already planned. So this is the scheme expenditure. Non-scheme expenditure which can happen suddenly, like the uncertain situation, natural calamities, etc. So that will be the part of your expenditure. Okay. So this is what the budget is. I have given you the overview. Now let's start with the questions and discuss in the form of question with the explanation. But in the end of the session, I will be asking you all how many answers you have given correct. So be very precise about your answers so that you will let me know in the end of the session how many answers you have given correct. Now fiscal deficit refers to dash. What does fiscal deficit refers to? So if I talk about deficit, deficit means loss. When the expenditure of Government of India is more than the income, this is known as deficit. So we have certain options here. The first we have the difference between government's total expenditure and its total receipts, including borrowing. Second, the difference between government's total expenditure is total receipts, excluding borrowing. Third, the difference between government's tax collection and salary payment. The difference between government's tax collection and government's borrowing. So what do you think, which of the following is the fiscal deficit? Which of the following is the fiscal deficit? Let me know which of the following is correct. A, B, C or D. Okay, so the deficit means loss, and whenever the loss happens, the expenditure of Government of India will be more than the income. That's the loss. Hana, that's the deficit. So fiscal deficit happens after the budget has been gone to the loss, when the budgetary deficit is there. What is budgetary deficit? The overall budget of the Government of India is in the loss. The overall budget means the expenditure is more than the income. That is known as your budgetary deficit. Okay, so here when we talk about fiscal deficit, it will be the difference between government's total expenditure and total receipts, and that you have to exclude the borrowing. So whatever loss happened, the total expenditure was more than the total revenue. After that, government has borrowed the money, so that will create your fiscal deficit. The right answer will be B option. Right answer is what? B option. This is fiscal deficit. Now there are 5 types of deficit in the budget. Okay, now which of the following is the definition of budget deficit, or you can call it a budgetary deficit. Budgetary deficit or budget deficit, both are same. So you have these options. First, excess total expenditure over total receipts minus interest payments and borrowings. When your total expenditure is more than your total receipts and You are subtracting the payments and borrowing. Second, excess of total expenditure over the total receipts minus borrowing. Okay. Excess of revenue expenditure over the revenue receipts. Okay. Excess of total expenditure over the total receipts. So what you're talking about? Budget deficit. It means the overall budget of the government went to the loss. And when the overall budget went to the loss, it means total expenditure is more than the total income. So right answer will be D option. The excess of the total expenditure over the total receipts will be the right answer. So right answer is D. Okay. Next, revenue deficit is calculated as. Revenue deficit is calculated as. So I will tell you, you can answer here. I will give you the understanding of revenue deficit means what. Actually, budget have its two components. The first one is revenue budget. The revenue budget is the short-term budget of the government of India, which talks about daily income and expenditure. Then we have second component, capital budget. Capital budget is a long-term budget which talks about the long-term income expenditure of government of India. Now revenue receipts. Revenue budget covers your revenue receipts. It means the income that government of India is earning on the day-to-day basis, and the revenue expenditure, that means simply your expenditure that government of India is doing on the day-to-day basis, like the salaries or payment, whatever. Now similarly, the capital budget will have capital receipts and the capital expenditure. So when the overall budget went to the loss, when the overall budget went to the loss, you can say revenue expenditure plus capital expenditure minus revenue receipts plus capital receipts. It means both the expenditures in revenue and capital are more than the revenue of, income of revenue and capital. So it is what? Whenever you calculate the overall budget expenditure or income, you have to cover revenue and capital budget. Right? This is what I'm trying to say. If I'm calculating the overall expenditure of the government of India, I will calculate capital expenditure plus revenue expenditure. I want to calculate the overall income of government of India, I will write like revenue receipts plus capital receipts, because budget have these two components. Now what will be revenue deficit? The question is asking about revenue deficit. So when this revenue expenditure is more than revenue receipt, that's the revenue deficit. So right answer will be your C option. Okay, right answer will be your C option. Clear? Next. Net tax revenue. So tax revenue is simply the earning that government of India does with the taxes. There are two types of taxes, direct and indirect. Why we call direct tax as a direct, or why we call indirect tax as an indirect tax? Because direct taxes are those taxes whose burden cannot be shifted. Let's say, for example, I am the customer, I am the public. So I have a liability to pay the taxes to the government, because government is providing me all the services I am using in the country. I am using road, I am using metro, I am using let's say public transport, whatever I am using, that is here because of the government. So I have a certain liability towards government. I have to pay that amount to the government in the form of taxes. And the taxes are of two types, direct and indirect. So direct tax is what? It's a type of tax in which you will find, what can I say? You cannot shift your liability on the third party. Let's say I'm earning a certain amount of money. I'm having my own income. So the company is deducting TDS, that is tax deducted at source, every month from my salary, and that other 24/7 pays that to the government of India. Now I am saying to the company, do not cut my taxes from my salary. Give me my whole salary. My taxes will be paid by my brother. Can I say that? No. Because direct tax is the liability of you, the person who is earning the money. You cannot shift your liability, you cannot shift your burden on the another party. So direct taxes are those taxes whose burden cannot be shifted on the third party. But the indirect taxes, burden can be shifted on the third party, like in the GST. Okay. So which of the following is correct in case of net tax revenue? Tax revenue we are calculating here. So whatever the gross tax revenue was minus national calamity contingent duty transfer to NCCF minus state share. So this is the right option. The first option is correct here. Kyun? Because the gross tax, whatever the gross tax revenue was there, out of that you have deducted the value which you have to pay because of the national calamity. You also have deducted the value that the share you have to send to the state government. So after deducting all the expenditure that you have done out of your gross income from the taxes, that will be your net tax revenue. Here you are adding the tax share. Why you will add the text here? You are paying taxes to the state government. You are not taking taxes from the text here. You are paying taxes to the state government. You are not taking taxes from the government, state governments. That's why this won't be right. Here you are adding the expenditure of national calamity. How you can add? This is your expenditure. This is your not income. Tax revenue is the income of the government. This is your expenditure. It cannot be right. The fourth one, again, it is adding the national calamity expenditure. That's why the right answer will be A option. Okay, right answer is A. Next question. Net fiscal deficit is the difference between. Now, fiscal deficit we have seen after the budget went to the laws, whatever the borrowing of the government, that will be known as fiscal deficit. So, it is the difference between what? Gross fiscal deficit minus net interest payment. Gross fiscal deficit and interest payment, gross fiscal deficit and net lending, none of the above. So it's very obvious, net lending remained, you have taken the remain lending you are and talking about gross fiscal deficit. So when you subtract the net lending from the gross fiscal deficit, you will get the net value of fiscal deficit. Because we have discussed now, fiscal deficit is what? Total expenditure of government minus total income of the government excluding borrowing. So you have excluded the borrowings here. And that's why it's a difference. Clear? So right answer will be C option. Right answer is C option. Next. Total receipts in the central government budget. Receipts means the income of the government. So from where the government of India is earning income, that you have to tell here. The total receipts of the central government. So we have these four options. First, revenue receipts plus capital receipts plus fiscal deficit. It can't be true. Revenue receipts, capital receipts plus drawdown. It can be true. It can be true because you have revenue receipts, capital receipts. Revenue, capital, again deficit. Deficit is not your receipt. Total receipts means we are finding out the income of the government of India. Deficit is not an income of the government. That's why first and third will be wrong. And also the fourth one will be also wrong because it is including deficit. So the total earning of the government is revenue receipts plus the capital receipt plus the drawdown of cash balance. Whatever cash balance was there, that is also the income of government of India, right? That's why it is the right option. So right option will be your B option. Clear? Next question. Net fiscal deficit is calculated as. So that's what we have discussed till now in this particular session only. So which of the following is the correct calculation? The formula it is asking. Gross fiscal deficit plus net lending, you can't plus, you have to calculate net value. Net means remained value you have to calculate. So gross minus net lending, is it true? Yes, it is true. We have just discussed in the form of difference. The difference between the two is known as net fiscal deficit. So simply gross fiscal deficit minus net lending will be the right option. Okay, right answer will be B. Now, expand NCCD. Which of the following is the full form of NCCD? One second. Okay, this is the NCCD. First is saying National Council on Crime and Delinquency, National Council on Credit and Debentures, National Council on Commercial and Deregulation. No. The right answer is National Council on Crime and Delinquency. So right answer will be your A option. So a 0.5 mark question can be asked in the paper. I will tell you 0.5, 1 and 2. This is the distribution of your mark. In 0.5 you will find what? In 0.5 questions, you will find like one-liner questions. You will find, let's say, for example, abbreviations. Okay, abbreviations full form can be asked. You can find like the questions of your true false type can be asked. One-liner true or false statement was. One-liner you can find fill in the blank. In 2-marker question, you will find case study questions can be there. Statement based question can be there. Okay, so these are the pattern of question you can see that will be available in your paper. So accordingly the abbreviations will be also important. Whatever abbreviation you find out, do make sure you read that. So here the question is asking pick odd one out. The different one out of these 4 options. Out of these 4 options, which of the following is a different one that you have to tell? The loans to public enterprises, pension, subsidiaries, police. So you can see in the budget we talk about loan given to the public enterprises, pension, that is the expenditure of government, subsidies also the financial assistance government is providing to the social welfare of the country. Police is not a part of like a budget or union budget of the country, so the right answer will be D. This is the odd one out. This is what? This is the odd one out. Next question, again the pick the odd one out. Achha, the pick odd one out will be also your 0.5 mark question. This pattern of question can be seen in the 0.5 mark question. Okay. So now these are the 4 options you have. First, custom, service, interest or income. Which of the following is your odd one out? See, all are the form of income. Custom duty, government's income. Service tax, government's income. Income tax, government's income. Interest receipts is also a government's income, but the difference is it's a non-tax revenue. It's what? It's a non-tax revenue, and the A, B and D all are what? They are tax revenue. So the right answer will be here your C option, because it's the only option that is the income of government but from the source non-tax revenue. So that's why C option will be there. Good morning everyone, welcome to the official YouTube channel of Office Asada 24/7. How are you all? So let's start the session. But before starting the session, welcome to the channel, and if you are new to the session of Indian economy, Indian financial system 50-day 50 classes, so I will let you know what actually we are doing in these sessions. So first of all, Monday to Friday these sessions will be there on the same channel in the morning 7:30 a.m. Apart from that, Saturday and Sunday something special is going on in every Saturday Sunday. What is that? I will be informing you all in the end of the session. But what we are going to do in this particular session, every day we are taking one chapter of your IFS. As you know, 45 units are there, and we have already covered your 23 units. Today we are going to cover 24th unit, and that comes another module C. So every day we are taking a particular chapter on which we are discussing a chapter in form of MCQ plus explanation of that particular, so that you will have the understanding what actually is going to be there in your paper when you are studying, or when you are studying your topic, you will be already knowing about it, what actually this topic talks about. Okay, so let's start the session. But before that, I am your mentor Amanjot Kaur for Indian economy, Indian financial system, as well as for PPP, principles and practices of banking. So as I've told you, there are total 45 units in this particular subject, and out of that 19 units are there in a module A and B that we have completed. We have started module C, and in module C we have already covered 23rd unit, and today we are going to cover the 24th unit, that is the microfinance institution. Now what is microfinance institution? Microfinance institutions are those institutions which are helping the financial systems to exchange the funds from the persons who have surplus of money and the persons who have deficit of money. So if you see the module C, it talks about what? It talks about the Indian financial architecture. So first, what we have understood in this particular unit, we have discussed what actually the financial system is. And all the rest units will be defining you the institutions, the mediators which are helping to the financial system to survive, like the banks. Banks are the mediator, which are exchanging funds among the persons who have surplus money and the persons who have deficit of. This is bank. Then banking laws, which are helping the banks to define what kind of services and in what condition, in what guidelines they can be allowed to provide these services. Then development financial institution, they are doing the same thing as a mediator. They are transferring fund to a particular sector of the economy to develop them. Microfinance institutions are doing same. NBFCs are doing same. Insurance companies are doing same. The regulators, RBI, SEBI, PF, RDA, Adda, they are also working for the same thing. And in these financial institutions, in these mediator, what have been changed? What are the reforms have been introduced, by which it become more better to provide the financial services or to manage the financial system of the country? That will be defined in unit 28. So you can simply see here, everything is available in this particular unit that helps the financial system to run. And today we are going to discuss the microfinance institution. So before understanding or before moving towards the question, let's first understand what are these. Before that, there are two terms. First is microcredit and the second one is microfinance. If I am talking about microcredit simply means a small loan, because credit means loan, credit means you are taking a funds. So microcredit means providing small loan services to the public. What does microfinance mean? Microfinance means the microcredit plus small savings, small investments, small insurance products, small pension products. It means microfinance will cover everything which is related to money, and microcredit will cover only the case of the loan. Clear? Now, if I talk about the microfinance, it covers your small loan. It means the money you are providing as a loan, but the small amount of money. Then second, small savings schemes will be available. Small savings product will be available. A small insurance product, small pension products will be available. So microcredit is a part of a microfinance which gives only loan, but the microfinance provide other services which are related. In addition to the microcredit, it provide other services. So this is the microfinance and microcredit. Now, what is microfinance institution? They are the mediators. They are the mediator which are helping us to deliver the financial services, to deliver the financial product, to fulfill the need of the credit, to fulfill the need of the savings and insurance and pension to the last person of the country. So they are helping the banking system. They are helping the other financial system also to perform this activity. Clear? So now let's start the microfinance institution. First question. So the first question is talking about, in which year did RBI introduce the lead bank scheme? In which particular year RBI introduced the lead bank scheme that we are talking about? Okay, so what is lead bank scheme? Let's first understand what is lead bank scheme. And the options you have is first 47, 69, 70 and 90. These are the options in front of you. Clear? These are the four options in front of you. Now, what is lead bank scheme? Lead bank scheme simply, first of all, it was introduced by RBI, and in this scheme, the fund district, the particular district will have one lead bank. Will have one lead bank. One district will have a one lead bank. And this lead bank can be formed to the public sector banks or the private sector. Either public sector bank or private sector bank will be formed as a lead bank in a particular district to promote that particular district. And what they are going to do after becoming a lead bank, first they have to do the branch planning, branch expansion planning. It means where it is required to open the branch of a bank. Okay, the district where there is less number of branches of a bank, because of that the customers are not getting the full services of financial needs or the financial services. So where it is required to open the branch, that will be planned. The second thing, they will plan the credit also. They will do the credit planning also. Like what kind of loan product can be introduced, what kind of credit facility should be in this particular district, that will be done by the bank scheme. Clear? So this is what we are talking about, lead bank scheme. So it is helping the financial inclusion as in the form of having a particular lead bank in the country in each district. Okay, and that district lead bank will be focusing on the branch expansion and credit plan. It was introduced in December, but in which year? In 1969. And the committee that have introduced this, that was the Godgill committee, or you can call it a Godgill study group. Right? You can call it a Godgill study group or a Godgill committee, both can be answered. The right answer here will be your 1960. The right answer is 1969, and all these are the detail about your lead bank scheme. So the right answer is B. Okay, December 1969. Now, microfinance consists of which of the following? So I have just answered this particular question here already. So let me know which of the following products will be the part of microfinance. So first we have micro savings, micro credit, micro insurance, micro pension, or all of the above. So I have told you microfinance simply means the financial services or money related services you are providing, but you are providing micro services now. So it will be micro savings, it will be micro insurance product, it will be micro pension, it will be micro credit. Micro credit means loan facility you are providing, small loans you are providing, that's a micro credit. All these will be the part of microfinance. All these are the part of microfinance. Okay, so the right answer will be all of the above. Right answer of yours is all of the above. Next. Which of the following types of microfinance institutions are regulated by RBI? So first of all, there are 3 types of microfinance institution, and out of those 3, which will be regulated by RBI? So first of all, if I talk about banking institution or non-banking financial institution, they all are regulated by RBI in the end. So we know financial institutions, we are divided into 2 parts, that is banking institution and the non-banking financial institution. Banking institution, you all know that will be your all the types of banks in the country. They will be regulated by RBI. But the non-banking financial institution like the NBFCs, the primary dealer, the All India Financial Institution, they are also regulated by RBI. So they have been incorporated under the Companies Act or somehow, but in the end they have to follow RBI. So here the NBFC MFI will be regulated by RBI. Okay, NBFC MFI will be regulated by RBI here. So there are 3 types. First type is not-for-profit MFI. Second type is mutual benefit MFI. Third type is your NBFC MFI. So do remember there are 3 types, and out of these 3, only NBFC MFI will be regulated by RBI. The right answer will be C option. Okay. Next question. Next question we have here. The Grameen Bank model was developed in which country? This was a very famous model. The Grameen Bank model was the very famous model of the which country? The question is asking. After seeing success of the Grameen Bank model, we have introduced the rural. We have introduced the microcredit facility. Because what have been seen, actually the countries are in front of you, India, Nepal, Sri Lanka and Bangladesh. And the right answer is Bangladesh. Now what used to happen in the Bangladesh? The money lenders, the sahukars, they used to exploit the persons who used to take loan from them. They used to charge a high rate of interest from them. And that's a kind of demerit. So that's why the Grameen Bank model was introduced to safeguard these type of people from the money lenders, sahukar, etc. Okay, so this was the Bangladesh. Next. Which of the following are included in self-help group bank linkage program? So we have a certain options here. Out of that, you have to tell which of the following will be covered under the self-help group bank linkage model. And the options are in front of you. So first of all, what is self-help group? Self-help group is simply a group of 10 to 20 people. It can be all women, it can be women and men combined. Okay. Now maximum people understand by the name of self-help group, they always think so only it's a group of 10 to 20 women. No. Yes, it's true that government promotes more to the women's self-help group, but it's not like there is only women's self-help group in the country. It can be combined, male, female can be there. 10 to 20 people will be there. And the self-help groups was actually formed to promote the savings habit among the people. To promote the savings habit among the people, we have introduced these self-help groups. Clear? Now, apart from that, apart from all these things, one more important thing is there, that when we have introduced the self-help group, we wanted each and everyone to have a habit of savings. But apart from that, we wanted to fulfill their requirements of funding. So that they will be contributing a certain amount of money in a particular duration. And after that, whoever requires money, that money will be provided to that person. But before that, if I talk about, we have also provided the services of bank linkage. And this bank linkage program was actually recommended by SK Kalia committee. Okay. And after that, we have started providing loan facility to the self-help group. So which of the following are included in the self-help group bank linkage programs? It will be including opening savings account, lending to self-help group, opening current account. No. So right answer is all except C. So you are not providing current account services. As I have told you, the core function, the fundamental of the particular small self-help group is to promote savings, not the current account. You are providing loan, but you are not making them available the current account facility, because they are not capable of taking this facility. Now, they need money for the survival. Even for the survival, they need money. So how they can open the current account? So right answer is your all except C, D option. Okay. Now, acha. Now, as you remember, if you remember on the Telegram, I have shared something with you, like I am coming up with a very better thing for your JAIIB October exam. So we were thinking about hiding it from all of you and then reveal on the 9th of September. But as you know, if you have a certain secret, you have to make it out. So not full secret I will be revealing here, but yes, I want to tell you all that the JAIIB October 2023 very well planned by officers at a 24/7 team, and that will be revealed to all of you on this particular date on this time. So the 9th of September 8 p.m. will be a very important time for you. So do make sure have a notify me button on, because the session has been created, the event has been created. Just go to the event you will find in the comment section and click on that particular event and focus on what? That you also click the notify me button, because that will let you know when your event will be live. Okay, so 9th of September, 8 p.m. is the date you have to meet to know much more detail about this surprise. But trust me, this is the surprise for your JAIIB October 2023 paper that is definitely going to help you. Now, which of the following figures in the Fair Practice Code developed by RBI for NBFC MFI? The question is asking here, which of the following figures in the Fair Practice Code developed by RBI for non-banking financial companies MFI? So FPIs, FPC have been created by RBI for the NBFC MFI. First, we have there should be board approved loan application format. Second, no security deposit should be taken from the borrower. Third, a borrower should not be member of more than one self-help group. And fourth, all of the above. So which of the following is a part of what? Which of the following is a part of your Fair Practice Code developed by RBI for the NBFC MFIs? And the right answer is all of the above. They all are going to help under the NBFC MFIs. So this Fair Practice Code has been given by RBI that have to be followed by them, provide the better services to the customer. Right answer is D. Now, mark the correct statement in relation to the concept of microfinance. In relation to the concept of microfinance, which of the following is correct statement that you have to tell? And we have three statements in front of us. First is saying microfinance is a form of financial services which provide small loan. This is correct. Other financial services to the poor and the people above poverty line. So below poverty line people are the weaker section. They are the economically weak society of our country, the disadvantaged population of our country, we can say. And also first option is saying that microfinance provide funding facility, small loan facility and other financial services like the small saving, insurance, pension, etc. to the below poverty line as well as above poverty line population. Second is saying it is economic tool designed to promote financial inclusion, which enable the poor and low income household to come out of the poverty, increase their income level and improve their overall living standard. Third is saying microfinance consists of micro savings, micro credit, micro insurance and micro promotion. So what do you think which of the following is? What do you think which of the following is? So the right answer here will be, if you see here, the first option is saying it will provide to the poor and above. No, above poverty line will be having a lot of services with the bank. They do not have to have a microfinance. They are already the above poverty line population. Then second is almost already covered, or I can say it is 100% correct about your economic tool to promote the financial inclusion in the country, enable the poor and low income household to come out of the poverty and also increase their income level. Achha, on the basis of income level, the micro loan will be provided to the people. And what is that income level? I will let you know in the end of the session, because one more question is there about the same topic. Okay, now next. Microfinance consists of micro savings, correct. Micro credit, correct. Micro insurance, correct. But what about micro promotion? No. So the only correct statement is second option. It means the right option will be C. The right option will be your C option. Here, C option. Next. Which of the following is correct definition of microfinance loans? Which of the following is correct definition of microfinance loan, and in this particular question you will understand what is the income limit is required to get the microfinance. So first is saying microfinance loan is defined as a collateral free loan given to a household having the annual household income up to 3 lakh. Okay. Second, up to 5 lakh. Third, up to 1 lakh, or none of the above. So what do you think? Which of the following is correct? So two things are covered and they are correct, that it will be provided as a collateral free loan. It means no security, no collateral is required here. And the second is also correct, it will be provided to the household. But at what annual household income it will be provided? A, B, C or D? So the right answer here will be A option. Up to 3 lakh annual household income will be there. Then the microfinance loan will be provided to them. Okay, so right answer is A option. Next, which of the following is our key recommendations of the Malekam Committee? Okay, so which of the following are the key recommendation of the Malekam Committee, and these are the options we have. First, we have here criteria for defining microfinance loans that is classified as qualifying asset. Second, transparency in interest charges as well as other terms and conditions of the loan. Third, prudential norms on capital adequacy and provisioning requirements of the bank. Fourth, prescriptions related to pricing of credit terms of a margin cap and interest rate ceiling on individual. So this Malekam Committee was formed by RBI. It was formed by whom? RBI. And this committee has given a certain recommendation to us. And which of the following is the key recommendation of this committee? And the right answer is all are the recommendation. All recommendation has been given by this committee. This committee actually have given around 7 to 8 recommendations to make the banking system, financial system more proper. But here we have 4 statements. So all are the covered under Malekam Committee. Right answer is D. Next, we have which of the following is are correct about self-help group bank linkage program models. Right, next question is which of the following is are correct about self-help group bank linkage program models. So we have these 3 models. First model, model 1, model 2, model 3. There are actually 3 models only. Okay. The model 1 is NABARD bank and self-help group will be involved. Model 2 is saying NABARD bank, self-help group will be involved, but apart from that, NGO will be involved as a facilitating agency in the model. Okay, NGO will be involved as a facilitating agency in the model 2. Model 3 says NABARD bank, NGO, self-help group will be there. Here the NGO will be involved as what? As the financial intermediary. You can see it is under the model that is NABARD bank, NGO, self-help group model it is. So here NGO is not only a facilitating agency, no, it is working as a financial intermediary. So what do you think which of the following is correct? So the right answer here will be all are correct. Model 1 will not have NGO, Model 2 will have NGO but as a facilitating agency. Model 3 will also have NGO but as a financial intermediary. Do remember these are the 3 models under the self-help group bank linkage program model. Okay, do remember them. The right answer will be your D option. Okay. Now, as I have told you, microfinance institution have 3 types and self-help group bank linkage models have 3 types. Okay, so do remember that, that is very important. So we have a microfinance entity here. So microfinance entities will be in the 2 forms, that is informal sector and formal sector. Informal sector, you all know the type of a sector where is no regulations and regulatory bodies there. Formal section, proper regulation guidelines standard will be given. Sorry. In the informal, you will find money lenders, Mahajan, shops and your landowners. They do not have any kind of guidelines. They do not have any standard way to provide the financial services. But when we talk about informal sectors, when we talk about formal sector, we have banks. Then we have self-help group bank linkage, which have 3 model 1, 2 and 3. Then we have microfinance institution. There are 3 types. not-for-profit microfinance institution, mutual benefit microfinance institution, NBFCs microfinance institution, and they are regulated by RBI. Okay, so this flow chart is very important. Do remember. Okay, so good morning everyone, welcome to the official YouTube channel of Office SRA 24/7. So first of all, let me know how are you all and how your preparation is going on. So as we know, we have very less day remaining for your JAIIB October paper. The first paper of Indian economy, Indian financial system will be on 8th of October. So we have very less time and we have to utilize this time very precisely so that nothing is there which we will not be able to cover. So we have to cover the conceptual understanding, the topic wise practice, the full length mock test, the revision, everything we have to cover. And how we will be able to cover that? We will be able to cover that particular part of the syllabus by continuing our preparation. So do not take a gap just because you will think like at the time of exam I will take the leave and continue the session, continue the studying. Don't do that. Be continue in your regular preparation. Okay, so let's start the session. A very welcome to the channel. I am your mentor Amanjot Kaur for Indian economy, Indian financial system, as well as for principles and practices of banking. So in this particular session, what we are going to do, as you know, 50 days, 50 classes we have started every day. Monday to Friday, we are discussing a particular chapter of your subject in which explanation with MCQ we are covering the understanding of the chapter. So already module A and B we have completed. It means out of 45 units, the module A covers 11 units and module B covers up to 19 units. So that we have covered already. Now we are already on the module C and module C 21st chapter or 21st unit, that is your Indian banking industry that we are going to cover today. So Indian banking industry structure is what? Simply we have to understand the evolution of Indian banking in the country and the types of bank, everything we have to cover. So you can see module C we are discussing here, and if we talk about any particular bank or any particular, so in every type of bank we have discussed here that a particular definition, a particular category of bank has been defined by RBI. So first, before coming up to the questions, we will be starting with the understanding of the topic. So when we talk about banking structure simply talks about the types of bank, the evolution of the bank, and everything you have to cover. So first of all, in the 1770 year, in the year 1770, we have seen that the establishment of Bank of Hindustan was done, and this was the first bank which was established in our country in 1770, and the headquarter of the bank was in Calcutta. Now this Bank of Hindustan is the only bank, or we can say the first bank, which started the formal financial system in our country. Now what is formal financial system? We have discussed that already in the 20th unit. The system where the regulators are there, the guidelines are there, the rules and regulations are there, that system is known as formal financial system. So the formal financial system started in India from when? From 1770. Okay. After that, RBI, Reserve Bank of country, the central bank of our country, was established on 1st of April 1935. That's the first time we have established the central bank of our country in the year 1935, 1st of April. So when RBI was established, it used to be the private shareholders bank. It was what? It was the private shareholders bank. It means to establish Reserve Bank of India, to establish the central bank, we needed a particular capital, and that was not available with the government. The 5 crore initial capital was not available with the government, so that have been taken from the public as a shareholding, and that's why RBI used to be the private shareholder bank. But now the ownership of RBI has been changed. Now RBI is the government's bank, and in the year 1949, 1st of January, the nationalization of RBI was done. The nationalization of RBI was done. Since then, RBI is the government of India's bank, because government of India have purchased 100% shares of your Reserve Bank of the country. Clear? Apart from that, if I talk about the nationalization of commercial bank, the first nationalization of commercial bank happened in 1969. Okay, in which year? In 1969, the first nationalization of commercial bank have been seen, and there was 14 commercial banks that were nationalized in the year 1969. How many commercial banks were there? 14 commercial banks were nationalized. Now, why only 14? The first Bank of India was Bank of Hindustan, which was established in the year 1770. Since then, till 1969, we only had 14 banks. No, we had unlimited banks at that time also. But why only 14 banks? Because the government have given the criteria here. Only those banks will be nationalized who have what? 50 crore public deposit. है ना? Who have 50 crore public deposit, those banks will be known as your commercial banks. है ना? Only those 14 banks were nationalized in the year 1969. Then in 1980, the second nationalization happened, and in the second nationalization, 6 more commercial banks were nationalized. Now, why only 6 more commercial banks? Because the criteria government have given, that is 200 crore public deposit. So 200 crore public deposit was the criteria that have been seen here in the 1980. Okay, so those type of bank in India was only 6. That's why the 20 banks has been nationalized till now. That is 14 in 1969 and 6 in the 1980. But if I talk about right now, we have only 11 nationalized bank. We have not more than that nationalized bank, because the other nationalized bank have been merged with the another banks. Okay, that's what we're talking about in the nationalized bank. And if I talk about the banks in India, so first of all, we have the central bank of our country, and the central bank of our country is RBI. Who is the central bank? The central bank of country is Reserve Bank of India. And RBI has divided the banks in India into 2 categories. That is for scheduled bank. Those banks who are listed in the second schedule of RBI Act 1934, these banks are scheduled bank. And the second category is non-scheduled bank. Okay. Now the scheduled bank is further divided into 3 categories. That is commercial banks, non-commercial banks, and cooperative banks. So these 3 categories has been seen. Now the commercial banks further divided into 3 categories. That we have public sector bank, private sector bank, and the foreign bank. Okay. Now the public sector further divided into 2 categories. First is State Bank of India, and the second one is nationalized bank. Nationalized banks. Okay. Now the cooperative banks are also divided into 3 categories, and the 3 categories are primary credit society. The 3 categories are primary credit society, district central cooperative bank, and state cooperative bank. So these are the 3 cooperative banks: primary credit society, district central cooperative bank, and the state cooperative bank. Now the local area banks are the only scheduled commercial bank, non-scheduled banks in the country. Only the local area banks are the non-scheduled banks in our country. LAB means local area banks. Apart from these banks, we have another category of banks also, that is regional rural banks, RRBs. We have small finance banks. We have payment banks. These are also the type of commercial bank, but they have been established for a specific purpose. That's why we define them individually, because these are public-private foreign banks on the basis of the ownership. These are the types of commercial bank, and these are on the basis of the purpose they have been established. Like RRBs was established to uplift the rural economy. Now the small finance bank was established for what purpose? Simply to do the financial inclusion. Same reason was there for the payment banks also. Okay, so this is the all types of banks which are present in India. This is the banking structure of our country. Okay. Now I hope everything, or I can maximum thing I have covered here in form of the theory, a kind of introduction of the chapter. Now let's move forward and talk about the questions, and we will discuss the rest of the chapter in form of MCQ. Okay, so first question is, the NABFID was set up as a corporate body with an authorized share capital of dash. So if I talk about the NABFID, NABFID is a development financial institution. What is a NABFID? NABFID is a development financial institution. We have NABARD, we have SIDBI, we have NHB, we have EXIM, we have IFCI, and then NAFID. So these are the development financial institution, and they work for a particular, they work for what? They work for a particular sector only. Like you can see, NABARD work for agriculture rural development, SIDBI works for small industries, NHB work for housing sector, EXIM work for export and import, then IFCI works for industries, big industries, and NAFID works for infrastructure development. So development financial institutions are those institutions which develop the particular sector of the country. Now the first development financial institution was IFCI, and the latest development financial institution is your NAFID. So NAFID was established in the year 2021. So what was the authorized share capital that has been seen when we have established the NAFID? And also the same question I have put here was the question in the May 2023 paper also. So which of the following will be right option? 1 lakh crore, 5 lakh crore, 1.5 or 1.85. So right answer is 1 lakh crore. The 1 lakh crore was the authorized share capital of NAFID. It was established in the year 2021. Okay, do remember that this is a very important part. Google Pay is a dash. So which of the following is a Google Pay? So Google Pay used to be a what we can call it, it was a tech company that has been started providing the financial services by providing payment platforms to the customers. So it's a TechFin company, that is the Google Pay. That's a type of a TechFin company, that is Google Pay, a very famous application or very famous payment platform we use. Now, in terms of which section of Banking Regulation Act is the business of banking defined? In which section the banking or business defined? And the sections we have in front of you, 5, 8, 10 or 6. And the Banking Regulation Act was introduced in the year 1949. Now, what is actually the business of banking? Do you let me know which of the following option is correct, and I will let you know what is the business of banking. Business of banking is accepting deposit from public. Accepting deposit from public for the purpose of lending or investment. For the purpose of lending and investment, you are accepting deposit from the public. Then the last one we have what? The last one we have, it will be repayable. It will be repayable on the demand. That is known as your business of banking. So first is accepting deposit from public for the purpose of lending or investment, and that will be repayable on the demand of the customer. Now these are the business of banking. But apart from that, various forms of business is provided by banks. Right? Banks are not only providing these services, they are providing more than these services also. So the various forms of business that the bank performs is defined under the section 6 of the same Act, Banking Regulation Act. So apart from this business of banking, what other forms of business bank perform? Like providing demat account, insurance policy, mutual fund, etc. So these are the various types of business that banks provide, and this is defined under the section 6. Now this definition of business of banking is defined under section 5B of Banking Regulation Act 1949. Okay, so right answer will be A option. The section 5B talks about the business of banking. Clear? So right answer is A. Okay, it is written B here. It's not B. The right answer is actually A. Okay, right answer is A, not B. In section 5B it is defined. Next. What is the maximum balance that a payment bank can maintain in each account? So payment bank is what I will let you know. You let me know with what is the maximum deposit that can payment bank accept from the individual customer. So payment bank was introduced by RBI as a differentiated bank in the year 2014. In the year 2014, RBI said it is introducing a differentiated bank, and that differentiated bank got licensed in 2015. That was payment bank and a small finance bank, right? Now payment bank and a small finance bank was introduced for the financial inclusion purpose. Out of these two, payment bank bank was introduced on the recommendation of the Nachiket More Committee. They can accept deposit from the public, but they cannot provide loan to the customer. So if we talk about here, the maximum balance that a payment bank can maintain in each account, when the bank was introduced in 2015, it was rupees 1 lakh. But now it is what? It is rupees 2 lakhs. It's what? It is rupees 2 lakh that we will see in the payment bank accepted by the bank on from per customer. Okay, 1 second. This is B. This is B. Okay, 2 lakh per customer can be accepted by payment bank now. Earlier it used to be 1 lakh, but now it is 2 lakhs. So now the right answer will be B option. Next question, which of the following are the feature of payment bank? So which of the following are the features of payment bank, you have to tell, and you have these 4 features, out of which you have to decide which of the following is the feature of a payment bank. So first we have, they are differentiated banks and not universal bank. Okay, this is, I have just told you that payment banks are differentiated bank, that I have told you. So this is correct. But what about universal bank? They are not universal bank. Yeah? Actually, universal banks are those banks which provide all the services under a roof. When you go to the bank, deposit, withdrawal, lending, check clearance, demand draft, locker facility, safe custody, demat account, mutual fund, insurance, credit card, debit card, international credit card, debit card, everything is available in under a single roof. That is the universal banking. But the payment bank cannot work as a universal banking, because payment bank cannot accept deposit from, payment bank cannot give loan to the public. So that's why they are not universal bank. So this is also true. So first statement is a feature. Okay, second, these operate on a smaller scale. It's very obvious. The payment banks are the example of narrow banking. Narrow banking means when the bank places its fund only in risk-free assets. That's what the payment bank can also do. So this is also true. It needs to have minimum paid up capital of 100 crore. This is also true. To start a payment bank, you need a 100 crore initial paid up capital. The minimum initial contribution of the promoter of the payment bank to the paid up equity capital is required to be at least 40% for the first 5 years from you have commenced your business. So this is also true. The promoter contribution in the initial 5 years will be 40% only. It means all are the features. It means all are the features of the payment bank. Okay, all are correct. Right answer will be D option. So right answer is what? D option. Clear? Next. Next we have here, which of the following are not product of NPCI? Which of the following are not the products of NPCI? Now what is NPCI? I will let you know. NPCI is National Payment Corporation of India. That's a umbrella organization for our country, because it maintains all the retail payment system in our country. It maintains all the retail payment system in our country. That's the NPCI. So NPCI is an umbrella organization. And RBI have thought, and RBI have said that, like, NPCI first of all established in 2008 by RBI and Indian Banks Association. And before some time RBI said that NPCI have the monopoly in the market, because all the retail payments are managed by NPCI. So it kind of actually have a what? It kind of actually have a monopoly in the market. And to remove that monopoly and to stop that monopoly from the market, RBI has introduced the new umbrella entity. They have not been established yet, but the licensing or the application, I can say, the application RBI started getting from the new umbrella entity. So these new umbrella entity will be the competition of the NPCI, so that NPCI will not create the monopoly in the country. That's the RBI's idea. Now, which of the following is not a product of NPCI? RUPE is a product, IMPS is a product, NACH is a product, NFS is a product, but not NEFT, RTGS. They are managed by RBI, and they both have become 24/7 also. So all are the product of NPCI except fifth. So this is not a product of NPCI, all the others are. So right answer will be D option. Okay, next. In terms of which section of Banking Regulation Act is the business of banking defined? So this we have done already. Now this is a repeated question. Really sorry. Now, a transaction carried out at an ATM of the card issuing bank is called an dash transaction. See, there are two types of transaction. First is on us. Second is off us. On us transaction means, let's say you have a account in SBI and you have a ATM of SBI. So when you have account of SBI and you are using the ATM of SBI only enough to withdraw the money, that is known as on-us transaction. That's a on-us transaction. But if you have a account of SBI but you are using Punjab National Bank's ATM to withdraw the money, that is known as off-us transaction. So on-us and off-us transaction are there. On-us means you are taking the money, withdrawing the money from the same bank accounts, from the same bank's ATM, and in the off-us you are taking withdrawal from the different bank's ATM. So which of the following will be correct? The transaction carried out at an ATM of the card issuing bank only, the card issued by SBI and you are using the SBI ATM. That's what? That's an on-us transaction. Okay, so right answer is A. Right answer is what? A. Next question. Match the following. So we have institute here, we have the establishment of the institute, and we have to match them. So first let's see, out of these 5, which bank establishment you know? So I know the establishment of Imperial Bank of India. Imperial Bank of India was established in the year 1921, that is 5th. Because after the merger of all the Presidency Bank, we have created Imperial Bank of India. So I remember the year. Now, do I know the Punjab National Bank? Yes, I do. Punjab National Bank was established in 1894. Okay, it stayed in the Pakistan also after the independence for 1 year. Next, the first Presidency Bank, I even know this. The first Presidency Bank was the Bank of Calcutta, but its name was changed in the 1809. That was Bank of Bengal. So it was actually established in 1806, Bank of Calcutta. So this is third. Now, I do not know the establishment of Indian Bank. I really do not know the establishment of Indian Bank, but I know the establishment of Bank of Madras. It was established in 1843. That's the fourth. So the one more Presidency Bank was there. The first Presidency was Bank of Bengal. The second was Bank of Bombay. It was established in 1840. And the third was Bank of Madras, established in 1843. It means then the Indian Bank was the 1907. So I really didn't know the establishment of Indian Bank. Now do remember, Indian Bank was established in 1907. So the first is E, the second is D, the third is C, the fourth is B, and the fifth one is A. So first is E. No. First is E, this is true. Second is D, this is true. Third is C, this is true. Fourth is B, this is true. And fifth is A, this is also true. It means the right answer will be D option. The right answer is D option. So do make sure in the match the following, find out the option which you actually know. And what are the remaining, that will automatically be fit in the answer. So right answer is D option about the match the following. Okay, now. Next is, what is the minimum capital requirement for setting up of a small finance bank? If you want to set up a small finance bank, what initial capital you required? So I have told you 100 crore is required for the payment banks, right? Now if I talk about 500 crore, this is required for what? This is required for commercial banks or universal bank. Okay, and this 200 crore is required for a small finance bank. So when the small finance bank was introduced now with the payment bank, it used to have the initial capital 100 crore like the payment bank have right now. But its initial capital has been increased by RBI. Now it is 200 crore. So payment bank 100 crore, small finance bank 200 crore, commercial bank or universal bank 500 crore. So do remember all these three. Okay, so right answer will be your B option. When we started this particular series, there were 50 days left. Now the days are continuously decreasing. So it means we have to be more cautious about our preparation. Like we have a very less time period to prepare, and we have 4 subjects, each and every subject have 4 modules. So we have to be very much prepared for all of these. So now let's start the session. But before starting the session, I'm your mentor Amanjot Kaur for Indian Economy, Indian Financial System and BPP. And these sessions are going on Monday to Friday in morning 7 a.m. for PPB and 7:30 a.m. for Indian economy, Indian financial system. So do join these session only on Offices at 24/7. Now let's start the session. And as you know, in each and every session, I come up with a particular topic of yours, and in that topic, I will discuss the certain number of questions with the explanation of the topic. So what topic we are going to discuss today? We are going to discuss the chapter number 14 today, and simply we know that Indian economy, Indian financial system have the four modules. Out of that, first module covers only 11 units. Total we have a 45 units. Out of that, the first unit only covers your 11 units that we have completed. 12th and 13th unit we have already completed, and today we are going to discuss the 14th unit, that is money supply inflation. So before coming up to the questions, practicing questions, let's start and understand the topic, and then we will move forward to the questions. So first of all, what is money supply? So for money supply, RBI is the central bank of our country, and RBI need a certain, what we can call it, RBI need a, okay. So RBI is the central bank of our economy, RBI is the central bank of our country, and RBI needs to measure the liquidity in the market. RBI needs what? To measure the liquidity in the market. So RBI have to measure the money supply. RBI have to measure the money supply in the economy. And when RBI measure this money supply in the economy, this will be done by RBI with M1, M2, M3, M4 and M0. Out of that, M1 is known as narrow money, M3 is known as broad money. They are very famous, they are broad money and narrow money, and they are very famous. In contextual, maximum number of questions will be asked from these two. Now it's very obvious, like RBI is the central bank of our country. It's the responsibility of the RBI to manage the liquidity in the market. Liquidity means the cash flow in the market. And how RBI will be managing this cash flow? With the help of monetary policy. So we know that RBI makes monetary policy. RBI makes what? RBI makes the monetary policy. So this is the responsibility of RBI to manage the money supply. Let's say in the economy, the money supply is increasing. If the money supply increases, the demand of goods and services by the consumer increase. If we have more money, we will purchase more goods and services. If the demand increases, the supply will decrease, because the demand and supply will always have an inverse relationship. They always have an inverse relationship. So if the demand is increasing, supply will definitely be decreased. Okay. Now after that, the prices will start increasing and the money value of goods and services will be decreasing. And that creates inflation in the country. That creates what? That creates inflation in the country. Okay. Now, if money supply is reducing, then people will demand less goods and services, and then the supply will be more in comparison to demand, and then the prices will reduce, money value will increase, and this will create deflation in the economy. So you can see, if the money supply is more than required, then it creates inflation in the country. If money supply is less than which is required, it will create deflation in the country. So to make economy capable of being stable, we have to stable the money supply. And to stable the money supply, RBI makes monetary policy. RBI makes monetary policy, and the objective of monetary policy is what? To have a price stability. To maintain price stability is one of the objective of monetary policy in our country. That's what RBI is doing. But to maintain the price stability in the country, RBI have to know like how much money is there in the economy. And how RBI will know how much money is there in the economy? With the help of these measures of money. So with the help of M1, M2, M3, M4, M0, RBI will know what amount of money is available in the economy. Accordingly, RBI will make the monetary policy to maintain the price stability in the country. So they all are related to each other. Now, what is inflation? This is what we have discussed about about the condition, measures of money, and what is the reason behind which RBI have to maintain this measures of money, right? Now let's talk about a little bit about inflation. So what actually the inflation is? Inflation, if I am talking about, let's take a question here, like what is inflation? This is the question for all of you. What is inflation? Okay. Now I have first option, increase in money supply is inflation. I have second option, increase in demand is inflation. I have third option, increase in prices is inflation. I have fourth option, that is reduce in the money value is inflation, and I have fifth option, that is all of the above. So which of the following option you will give that this is the right answer for this question? What is inflation question is asking, and these are the option in front of you. So let me know which of the following according to you is correct about the inflation. So can I say that inflation is simply rise in the money value of goods and services? Can I say inflation is the increase in the money supply? Inflation is the increase in the demand? Can we say that? Let's understand this. So if I talk about our country, I have never heard this statement from any person that Mr. Ambani have more income now, that's why there is inflation in the country. I never heard someone saying that the demand of crude oil from the India is increased, that's why we have an inflation. I always heard people talking about like the petrol we used to purchase at 70 rupees per liter, now the petrol is 140 rupees per liter. It means the price has been just doubled. So I always heard people talk about in context of the price, and that's what the inflation is. So whenever the prices of goods and services are rising, that will create your inflation. So the right answer is prices increase. Increase in the prices of goods and services is what it's an inflation. Okay, now what happened if we're talking about inflation here? So what happens here? First of all, let's see what conditions are there. So economic conditions will be like whenever we talk about the increase in the prices of goods and services, the first of all money supply will increase. So whenever the money supply increases, what happens? Whenever the money supply increases, the demand of consumer will increase. Whenever the demand of consumer increases, the supply will decrease, because the demand and supply have an inverse relation, negative relation or opposite relation. So demand increases, supply will decrease, so prices will start increasing, because people are asking for more goods and you do not have a goods, so prices will what? Increase. In that situation, the purchasing power of money will be decreased. Purchasing power of money, or you can call it a money value also. The money value will decrease. Why money value is decreasing? The reason behind is because the prices are increasing. Let's say I used to have 200 rupees. I used to purchase 2 products in 200 rupees. This 2 pen I used to purchase in 200 rupees. Now what happened? The prices increase. Now this 1 pen will be available in the market for 200 rupees. So I used to purchase 2 commodity. Now I am purchasing 1. It means the 200 rupee note which I have now, it has a less capacity to purchase goods and services comparatively that I used to have. It means the purchasing value of 200 rupee note has been decreased. The reason behind, because the prices increases. So whenever there is an inflation, the money value of the currency will definitely be decreased. Okay, so all these terms are related to inflation, but they are not inflation. Inflation means rise in the prices of goods and services. Why prices are rising? Because there is a more demand. Why there is more demand? Because people have more money supply. And after increasing prices, what impact will be seen? The money value will be decreased. So this is what we are talking about inflation. Okay, so I hope till now everything is clear to all of you. Now we will be starting practicing the question, and in the end of the session I will be asking you all that how many answers you have given correct here. Okay, so do count how many answers you are giving correct. So first question here is that which of the following statement true about inflation? The statement which is true about inflation, and we have these 4 options in front of you. That is, first thing, a rise in the general level of prices leads to fall in the purchasing power. Both A and B, none of the above. So what do you think, which of the following is correct? First is prices are rising, second is purchasing power leads to decrease, third is both A and B, fourth is none of the above. What do you think, which of the following is correct? So right answer will be both A and B, because it's very obvious the general level of prices will increase due to the inflation. It leads to fall in purchasing power. Is it true? Yes, it's true. Why it's true? Inflation leads to a decrease in the purchasing power of people as well as money. Because let's say money supply increased, the demand increased, but the supply decreased, because of which the prices are keep rising. This is what inflation is. When the prices are rising, it means the cost of living will also rise. Cost of living simply means the money you have to spend to survive. That's the cost of living. It will increase. And when the cost of living increases, you somehow have to decrease your spending, and that will promote the lead to fall in the purchasing power. And similarly, the money value reduce because the money will be able to purchase less goods and services comparatively earlier. So the purchasing power of people and the purchasing power of money both will decrease. So right answer will be C option, sorry. Okay, right answer is C. Second question we are talking about here, the demand deposit of banks are included in. So if we talk about bank have a certain assets. Every business have assets and every business have liabilities, right? So if I talk about the asset of a bank, the asset of a bank is the loans and advances which bank provide to its customers. Okay, and what is liability? Liability means simply public deposit. Liability means public deposit, that's the liability. Okay, and these deposit are of two types. That is demand deposit, the type of deposit which will be dependent on the customer demand, and the second one is the time and term deposit. So the demand deposit covers CASA, current account, savings account. Time deposit covers RAFA, recurring account and fixed account. So demand deposits are those deposits which can be deposited as per the demand of the customer, withdrawal as per the demand of the customer. Time deposit or term deposit are, on the other hand, the types of deposit which will be there for a particular period of time. Okay, so now this is what the deposit we are talking about, and this is what the demand deposit is. Demand deposit means CASA, and the question is asking which of the following includes the demand deposit. So we have options M1, M2, M3. And to answer such kind of question, you should know what is M1, what is M2 and what is M3. Okay, so here let's understand this. If I am talking about M1, M1 is equals to currency unit plus demand deposit plus deposit with RBI. This is what your M1 is. M2 we have M1 plus post office savings. PO savings means post office savings. M3 we have M1 plus time deposit. I will explain all these, don't worry about it. And the M4 we have M3 plus post office savings, but excluding national savings certificate, right? So what is M1? M1 is saying CU plus GD plus deposit with RBI. Currency unit, CU means currency unit means whatever notes and coins public have. DD means demand deposit, whatever CASA public bank accounts have. Then we have deposit with RBI, where whatever reserves or deposit RBI maintains. This is the M1. M2 means M1 will be there, CU plus DD plus deposit with RBI will be there, plus you will have a post office savings. In the post office, you have FD, you have RD, you have MIS, etc. All these will be covered. Then M3 will be M1 plus term deposit. Term deposit means your RAFA. M4 will be M3 plus your post office saving, but the national saving certificate amount you have to be excluded. So here the question was asking which of the following includes the demand deposit. So M1 includes demand deposit, M2 includes demand deposit, M3 includes demand deposit, and M4 includes demand deposit. Because in M2 we have M1 have demand deposit, in M2 we have M1, in M3 we have M1, in M4 we have M3. So all these measures of money will include the demand deposits of the bank. It means the right answer here will be all. M1, M2, M3 all will be having the demand deposit. So the right answer will be your D option. Okay. Next question. Under money supply concept, the term broad money include which of the following? So broad money, I have told you which of the following is broad money. M3 is a broad money, and I have told you the formula of broad money. So let me know which of the following will be the right. Which of the following statement will be right? Let me know that. A, B, C or D? Okay, so if I talk about this particular question, the question is talking about what is M3, and you can see M3 will include the term deposit. The first one have deposit and public deposit. It do not include term deposit. Then we have currency with public demand deposit, other deposit with RBI. It also do not have term deposit. Fourth one is saying currency with public plus bank deposit plus post office deposit, but it do not include time deposit. Here is the time deposit with bank, the demand deposit of a bank, and the currency with public. So right answer will be your C option. Okay, right answer will be C option, which will cover the time deposit. It means RAFA will be covered under the M3, and broad money means M3 only. Okay, next, the most important money supply indicator monitored by RBI is dash. So we have measures of money M1, M2, M3, M4. So out of these four, which of the following is the important money supply indicator for the Reserve Bank of India that RBI calculates? Let me know which of the following is true. A, B, C or D. So I think it is very easy to answer. RBI measures this money supply because of the reason, because of the reason RBI wants to know how much money is there in the economy. RBI wants to know how much money is in the economy. That's why RBI is calculating this. Right. And RBI will want to know how much money supply in the economy, and the money supply in the economy that will be defining every liquidity to the RBI. That's a broad money. So right answer is C. Because it will cover deposit with, it will cover currency unit, the money with public, it will cover demand deposit, the money with commercial banks and all with the in the CASA, then the term deposit, then the deposit with RBI. Every type of money which is available in the economy will be calculated by the M3, and that's why it is the important money supply indicator that RBI calculates. So right answer will be your C. Next question. Demand deposit with a bank include all liabilities which are payable on demand, and they include dash. The demand deposit is what? With a bank include all the liabilities. It do what? It include all the liabilities which are payable on the demand. So they will include what? Options are these. Out of that, let me know which will be included here. So demand deposit with a bank include all the types of liability which are payable on demand. It will include. So demand deposit itself represents that the deposit you have given to the money that will be run on as per your demand. If you want to withdraw it, you will withdraw it. If you want to maintain it, you can maintain it. There is no such kind of restriction. Okay. Now, which of the following is right? The current deposit, demand deposit portion of savings account. This is correct. Margins held against letter of credit and guarantee will be covered. The balance in overdue fixed deposit, cash certificate, cumulative recurring deposits, all these will be covered under the demand deposit with the bank liability we are talking about. So all answer will be your D option. 1, 2, 3, all the statement were true. Next. Which of the following measures of controlling inflation? One second. Which of the following controlling measures of inflation can be taken by Reserve Bank of India and not by government? So we know inflation is a rise in the prices of goods and services, and that can harm the economy. If the prices are increasing above a certain level, it will create a loss for the economy. So inflation is good for the economy, but a limited inflation is good for the economy. So that's why if inflation is rising, this is the responsibility of the RBI to control that. So that's what we're talking about. RBI have a certain measure that is known as a monetary measure which controls the inflation. Government of India takes the fiscal measures to control the inflation. Similarly, we have foreign trade measures. It helps in the controlling the inflation. Apart from that, we have other measures in which production will be controlled so that inflation will be controlled. So out of these, you have to tell which of the following the controlling method used by RBI. Which of the following controlling method should be used by RBI? Okay. So the right answer here will be, first is saying introduction of progressive, one second. Introduction of progressive tax system. This is in the hands of the government of India, not RBI. Control over public expenditure, again done by the government. Then profits of the public sector is in the hands of the government. So these three measures will be taken by the government of India in the fiscal policy, but the rationing of credit will be done by Reserve Bank of India, in which RBI tells in which particular sector how much loan you can provide or how much loan you cannot provide. What down payment you have to take, what down payment you are allowed to take in case of what type of loan, also how many installments you can make in a case of loan. All this will be done by RBI. That is known as your rationing of credit. So right answer will be C option. This is the measure that RBI takes. Which are the following below indexes associated with the given statement? Like, it is an index that tracks the change in the retail prices of essential goods and services consumed by the households. So whatever goods and services we are consuming, that prices will be calculated on the retail level. And which of the following index calculates that? This is the question. Is it a CPI, is it a WPI, is it a PPI, is it a CPI for agriculture? So it can't be WPI because it measures the inflation in the wholesale market. It can't be producer price index because it takes the inflation at the production stage. Okay, so we have two options, consumer price index and here the CPI also. So this is what we know, that WPI measures the inflation at the wholesale level and CPI measures the inflation at the retail level, that we know, right? So in this situation, A and D can be right. Out of these two can be right. Now we are talking about essential goods and services consumed by the household. Here you are talking about CPI for agriculture labor. So right answer will be what? It will be B. Sorry, not B, this A, consumer price index. Okay, so CPI measures the inflation at the retail level and CPI also maintain the record of what? It also maintains the record related to your retail level plus the cost of living of the public. So right answer is A. Next, if the public finds ways of making the same amount of money perform a larger amount of transaction than before, then dash. So what we are talking about, if the public finds ways of making the same amount of money perform a larger amount of transaction. Let's say I used to purchase 200, I used to give 200 rupees and used to purchase 2 pen. Now I am giving 200 rupee, but I am purchasing 4 pen. It means the same amount of money which I have, it performing the larger amount of transaction. Okay, it is performing the larger amount of transaction. This is what the question is asking about. This situation be known as what? And these are the options in front of which of the following will be right? The demand for money must have risen, velocity of money have risen, incomes and prices must have risen, the supply of money must have risen. So which of the following is right? Which of the following is right? So it's very obvious the demand for money have not risen. The income and prices must have not risen. The supply of money must not have risen. The velocity of money have been risen. It means that the purchasing power of money increased. That's why in the 200 rupee you are able to purchase 4 products. So when the money supply, money value of the currency increases, that's the velocity must have risen of the money. So right answer will be your B option. Right is B option. Okay, because you are paying the same amount of money, but it is performing a greater transaction. Now, narrow money consists of, narrow money means M1. So, these are the options in front of you. Out of this, M1 includes CU plus GD plus deposit with RBI, and you can see currency with public is CU plus the demand deposit plus the deposit with RBI. So, this is your right answer. M1 will be your A option. Okay. Now, money supply refers to. So, a lot of time we talk about the money supply. We have just talked about these M1, M2, M3 are the measures of money supply. So, what money supply actually means? It's a liquidity that is available in the economy. But how to define this? First option is saying the amount of money in banks. Second is saying the amount of money with the public, the amount of money in circulation in an economy. So, which of the following will be right answer? Obviously C. Whatever money will be available in the economy, whatever liquidity will be available in the economy, that is known as your money.